Good day, traders. Stacey Burke from Stacey Burke Trading, carrying on our discussion about big picture structure, high and low of the week, of the session. I'm going to go through each pair and just demonstrate what I would do on a Monday. Again, the pink line is a Monday. I look at everything as a box, and prior to Monday, we have Thursday's low, and we have Thursday's high as a high and low of our box. But on Friday, obviously, we got a lower high, and so that becomes the boundaries on Monday morning when the week opens of our new box. We have a high and a low. Now, this low on Friday is an intercession low, but our big picture box that we're contained inside of on Monday for the low of the week and the high of the week heading into Monday's session is Thursday. And on Monday, we break out of Thursday's low. And again, we talk about the three things that markets do. They break out, they pull back, they continue, and they trend. They break out and they pull back and they reverse to the other side. We call that a false break. And they break out, they pull back, and they go into a trading range. But what's important for us as we start each week is that we want to know, okay, similar to the Asian range, if they extend the range out. So on Monday, they've extended the range of the previous weekly low. So they've broken out of the previous week's range. We draw a line. They pulled back inside of that range, so we think, okay, possibly we have a retest back to the high of the week, which now becomes Monday's high. And we lower that down. And now we have a high of the week, and we have a low of the week. And on Tuesday, they break down and pull back. So you can notice they consolidated between 2000 and Thursday's low in the tight trading range before eventually doing a 50 pip stop hunt in the London session and pulling back and then heading into New York. And when we have this breakout in the London session, of course, that's an indication of the market giving us a direction of where it possibly may move to. So we have a stop hunt low. We have longs on a 1 push, 2 push, 3 push back inside of that range heading into the New York Open. But we have longs trapped or with stops built up underneath of that swing low. They break down. We have an initial breakout of the weekly range, a pullback, consolidation, and a breakdown in London, and then a possible retest of that weekly low, and then a breakthrough. So we have a breakout, pullback, fill more orders, and continue the move. And again, we extend the range out. But more importantly, also what we talk about is measured moves. So I would typically take the low of Thursday and the high of Monday, and I would do a range expansion of at least 1 times that expansion. Now, in this particular case, of course, we broke through that. We pulled back on Wednesday. And, of course, we redraw our low of the week, and we project that through. The market 1 push, 2 push, 3 pushes into the U.S. Open again on Wednesday, and they revisited the low of the week, breaking out again and pulling back and consolidating and going into a trading range. Thursday was a trading range of Wednesday's low and Thursday's high. So again, we consolidated. We pulled back up to the high of our new box. We have a new redrawn high of the week because as we lower our highs, we redraw our box. And we had a pullback into the second expansion of Monday and Thursday's high-low. We came back with an M pattern, a double top, whatever you want to call it. And then on Friday, dropping down 25 pips, going into consolidation and continuing that move for a trend trade, breaking through 2 expansions of Monday and Thursday's range. And that move is still extending out and possibly could find some degree of exhaustion around that 1700 level, 1735. But my point is just that structure is the most important thing. We have a high and a low. We're in a box. People talk about trend lines and everything else. We do have a micro trend line break that would indicate that we initially had a micro trend line break on Friday morning, but now the market has continued to respect that falling pattern. But we don't trade off of these. We trade off of highs and lows. The market is constantly trading inside of highs and lows. When it breaks through that box of highs and lows, it may pull back and retest. It may pull back and reverse. And Thursday, Friday is a great example of that. It broke out, it pulled back and reversed and continued the move down. Or it will break down or up, pull back and go into a trading range as we saw on Thursday. If we look at the pound yen, we had a breakout on Monday, and we made a 1-2-3 to the high on a 1-2-3, a 33 trade. So we have Monday's low as a low of our box, and then Monday's high. And the reason why I've drawn that low on the first low of the day was because the stop hunt down hitting the lows of the day pulled back inside of the range. So as we head into Tuesday, that 13200 level remains intact. And the market broke down to that level, stop hunted, but it pulled back inside. So our high and our low still remain intact. Now also you'll notice that this second high, which was at 3,300, the market broke out and pulled back. So 3,300 and 3,200 remain basically our box for our current market for the week. We've extended the range out from Friday, so we're technically still in an up market, but they've hit both sides of highs and lows for Monday. And we wait. We trade inside of this until the market gives us an indication of a change in direction. So on Tuesday we see higher lows, and then we also see lower highs. And then of course we get a 1, 2, 3 into the US session, and they break down and they break out of Monday's low. So we break out of that double zero box. Again, we talk about the double zeros being important. They are the box. Even when we have markets extending outside of that, technically we are trading between the numbers, but we know that the market will hit those stops because there's money sitting there. But we break down into the lower double zero box on Tuesday, Wednesday. We extend it out on Wednesday. And again, timings, numbers, equity openings, and high and low of the day. But they go down 75 pips before pulling back 25, 50, and then 1, 2, 3, almost 75 again, and then hitting the stops and extending the move down. But you'll notice where that 1, 2, 3 led to was the bottom of Monday's low. So without doing anything else, if we just typically even just use the numbers and do a range expansion, we look for one full expansion. For possible some markets, some weeks we'll only do one full expansion. But in this particular case, again, on Wednesday we broke through that second level and we pulled back 1, 2, 3 before dropping down, and then Asia extending the range down. So we had 25, 50, and 75 pips. So in the Asian to Europe Open, we had already gone 75 pips. And again, thinking about ADR, average daily range, we can hypothecate that this market could possibly still extend down another level, but it pulled back into London. 1 push, 2 push, 3 pushes. Stop hunting traders who were short in Asia, and then 1 push, 2 push, 3 pushes into the US session before extending and pulling back above the first full expansion, stopping out traders who were short in the 1, 2, 3 before reversing off of a micro double top in the Asian session and then dropping back down below the 200 or the 100% expansion of the Monday range. So they had broken down, pulled back, and then came back inside of that double zero box as well as the second full expansion to continue that move down. Now, again, think about this. They broke through that next box and pulled back. And so if this market was going to continue, they wouldn't have broken or come back down below the double zeros. And again, micro trend line. But highs and lows. Every session, be drawing your highs and lows. And when this market is down, we have a continuation. You draw your line. They didn't come off of that. They broke through it and continued the move. And they extended that range out. But Monday, Tuesday, Wednesday, big picture. And you'll notice, we can see a double top in here. some traders, you know, we see these patterns all the time. And we'll look at Pound New Zealand. Again, Monday, Tuesday. So we have our Friday's low. And after Monday, we have Monday's high, because that is the low. They took out Friday's high on Monday. And so on Monday, we have a high of the week and we have a low of the week. And as we head into Tuesday, they extend the Asian range up before auctioning down, stop hunting high in London and then dropping it down, pulling back and dropping it down into the New York Open, 1, 2, 3, pulling back against the trend and then continuing the move down, taking out Friday, Monday's lows, extending the box, trapping traders short who are trading the breakdown of Monday's low as a breakout trade before pulling back, consolidating around Friday and Monday's low, and then on the news on to Wednesday, straight up 100 plus pips, 150 pips, taking out the highs of the week as well as the highs of Monday, Tuesday. And you'll notice that on Friday, that was Friday's high as well. And we'll project that across. So in this particular case, we had Friday, Monday, Tuesday formed our low of the week. And that range, though, that initial range, high and low, it's important each session to be identifying with that. So Wednesday comes, they extend the high of the week. So we redraw. We have a new high of the week on Wednesday. And we also have a new low of the week once the day has finished. But again, you can see now why it's important to be paying attention to how this market will continuously over 2 or 3 days give us the real box, the real highs and lows. And obviously intersession highs and lows will change. But the big picture can give us the bias of, you know, for example, on Thursday. So Thursday we have a high of the week and we have a low of the week. Asia 1, 2, 3 before dropping down, stop hunting low on the breakout of Monday's high, and then taking out the highs of the week, pulling back, going into consolidation. And for the most part, Wednesday, Thursday, Friday remained in a trading range, hitting the stops, pulling back to the other side, hitting the stops, pulling back, hitting the stops, pulling back, hitting the stops, and hitting the stops. Trading range. And one more, we'll look at the Pound Aussie. So again, on Monday, we open up inside, so we draw our high. We have our high of the week, which is our most recent swing high. Monday, they took out the swing low in the Asian session. They took out the swing low of the U.S. session. But our low of the week, we'll just project that across. Our low of the week remains intact. And on Tuesday, they take out Monday's high, so our week extends its range out. So now we have a high of the week, and we have a low of the week. So what we're looking at now is our high and our low. They come down, they take out the low of the week in the U.S. session on a 1, 2, 3, and they continue that move down for 50 pips. We talked about this trade earlier. So 1, 2, 3 against the trend for the continuation at the open of the U.S. equity session. We draw our low of the week, and on Wednesday, the market auctioned up. So again, the other scenario, when you have a big day like that, it's important we have a 1, 2, and then 1, 2, 3, and 1, 2, 3 on the bottom. So each pullback becomes a level for a possible stop hunt or a new high and low of the week. So in this particular case, they took out the last swing low on Wednesday. And so we would redraw that. And on Thursday, they took out that level as well. Just make that there. And they also just pipped out the low of the week, but they still respected that level. They came back inside. So again, if we look at the numbers, 8,900. So it's important that we look at the big picture, because obviously this can help us form a bias, and also though keep us out of being trapped inside of this box. And again, big picture. So for example, I don't know what's going to happen next week, but we could get an extension of this range again. So we could possibly have a range expansion of this, last week's high and low. We could project that down. We could get a range expansion perhaps of Wednesday's high and Tuesday's low. We could get a range expansion again, possibly down another 100 or so pips. And that's important for us to be able to recognize the bigger geometrical patterns, but also then intraday. So if we have that bias in place where we know the real high of the week is now at and the low of the week, we can look at the stop hunt and say, stop hunt high, we're going to short this market. They work the high again, they come back down. That's 2 pushes. They come back up and go back down into the end of the 12 candle window. At the low of the week, we can hypothesize that they may come back up. And again, they're working the high. They work the high. They're working the high of the week on a 1, 2, 3. We're thinking big measured move, continuation of that move down. It doesn't eventuate, but again, Friday, Monday, we may see a similar situation to what we saw this week, where we get a breakout of a high-low box. Again, each day's high and low gives us an indication of where the real box lies. And then, of course, we draw our highs and lows each day and each session. Again, Monday they respected the low of the week. They came back, they hit it a second time and then a third time. We're at the low of the week. 3 pushes, it hasn't moved. They break out again. Our thesis is that they will go back at least to the high of the day, and they do, and maybe even hit the high of the week. They do. They come back down, and then on Tuesday morning they rocket up 100 pips on a 1, 2, 3 reversal back, and our next target is, of course, the low of the week. So this is potentially you're getting in on the London session on Tuesday. Next possible target is the low of the week plus an extension of the range to stop hunt traders and put heat into them. And then, of course, we go sideways at the low. Again, if we project that, the low of Friday, we project that right across. You can see that the market almost respected that as a 50% level of that second. Oops, we'll just close this. So again, you're in a box. The market will either break out and pull back and continue a measured expansion of that box in either direction, or it will break out and pull back and go back to the other side. Why? Because there's stops there. Now, if that market fails to go there, then obviously we may get a retest and expand that range again. But if you get a breakout and a pullback, that's a false break. Next obvious target is going to be the most recent level where there are stops located. If that market breaks out and goes sideways, well, then we could be into a trading range. But again, there could be a bigger structure in place, as we see here. We may possibly be in for another leg down for an extension of this range that we're currently just breaking out of now on Friday evening. So hopefully that makes sense, traders. Intraday as well as high and low of the week. But make sure you're drawing these lines, because when we get a breakout and an expansion of a range in a weekly cycle, you're looking at potentially 1, 2, and maybe 300 pips of movement on a range expansion or a reversal. As we saw a couple weeks ago on the pound New Zealand, pound Aussie, we saw those big moves off the lows of the week back to the highs of the week. And they're over, maybe in 1 or 2 sessions. So important high and low structure, big picture. You're going to get 3 push patterns. You're going to get head and shoulders. You're going to get descending triangles. You're going to get ascending triangles. You're going to get double tops, double bottoms. But pay attention to these highs and lows. They will give you a huge insight, not only into the bigger picture, but in your intraday as well. Don't get caught on the inside. Look, you trade on the inside. You can see they're going to eventually hit the stops. And if you're caught on the wrong side, you're blowing out on a 50-plus pip stop hunt. That can do some serious damage to your trading account. So stay disciplined, traders. Stay focused. Stick to the big picture. Draw your highs and lows. Think of it like a big box. They either break out, pull back, and stay in the box, or they break out, continue that move, fill more orders, even on a 1, 2, 3 back to the borders of that box, and then they do a range expansion. And they trap traders inside, and they extend that range out, and they put, they margin their accounts out. So keep getting better. Keep it simple. Trade from the highs and lows, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.